I wouldn't say higher. I still got it a little bit below market, but I think like a
Mm,
rule of thumb is like trying to find things like 80% market value, and that's really like not always achievable. So even if it's like 90 to 95% of market value, if you're able to knock it down a little bit, but then you find something that is able to appreciate, because you don't want to rely on just appreciation alone, because you never know what can happen. What is happening right now is a lot more solid than speculation in the future. Like we never would have seen the pandemic coming and how it's affecting people being able to pay their mortgages and stuff like that. So a lot of that stuff you're not able to predict. So I try, like, if you're going to find something, try to find a balance that will work out either way.
Hi everyone, in this video, let's talk about property investing and real estate. We have Aysha Chaudhry, who's into investing into properties, who's into house hacking, which is something I think very, very interesting to talk about. So, Aysha, how are you? How's everything? Hope you are good and well there.
Hi, how are you? Everything's good on my side for sure.
Hmm. Before we talk about property investing or your journey towards it, I want to talk about how you started. What are you doing now, and what led you into investing into properties?
For sure. Yeah. So I actually have a full-time job, and I began real estate investing when I was 25. I am 27 now. I think the reason I really got into it is that, I graduated college, I had a lot of student loan debt, as a lot of people in the US do. Like when you graduate college, it's kind of shown as the avenue that you need to get into. Like you need to do this college, and a lot of people take on that debt. And I think looking back on it now, like I wish I was a little bit more educated of that process. And I also wanted to find a way to build, financial freedom for myself in the future, and really build up these extra income streams that allow me just to have a lot more security in my own life. So I really just started looking into different things I can do in terms of side hustles, side businesses. But I did want something that was scalable, so that I could get to the point where I could say, if I wanted to one day, I could walk away from, a corporate 9 to 5 job. Or if something happened, like last year with the pandemic, a lot of people were laid off. I wanted to make sure in those kind of situations that I would be good no matter what happened. So I think that was like my primary motivation, is just giving myself not only financial security, but just kind of giving me a lot more flexibility in my life.
I want to double down on this. You said you started at 25. What were you doing prior to the point where you were investing? Were you spending a lot when you graduated from college? How was it, and what was your turning point that you started at 25 years old?
For sure. No, I've always been a very frugal person. That's kind of like how I was raised. But I wasn't making a lot out of college, even with a college degree. I focused in business, especially in marketing and information technology. And I got a job at a really big corporate company here in the US. Actually, globally, they're a really big company, but still felt like I just wasn't making what I was worth. And so I saved a lot, but I just wasn't still saving as much as I wanted to. I've always just been a frugal person, but I just really doubled down. I did some odd jobs, and I do things like writing on the side, like doing freelance writing. So I would use a lot of those kind of like side incomes to also save that money. And I just got to the point when I was 25 that I was ready to, put money into a property.
I'm curious on this, and I'm sure a lot of people would be interested. Do you have like a percentage that when money comes my way, this is an amount that I will set aside for my savings and for probable investments later on?
Yeah, it depends on what the with my, like, I have a set amount that I do when it comes to my corporate job. So I put away a set amount per month. But when it comes to anything like any type of side income that I receive, like 80% goes to saving, 20% goes to either like if I want to put it toward a student loan or a car payment or something like that, or it goes to, spending or putting it towards something that I want to spend later on.
Oh, 80% for saving?
Yeah, any type of
Whoa.
extra income, I put like 80% away.
But for salary, it's a specific amount, not a percentage of the salary.
Yeah.
Okay, reminds me of what I did when I started out, because same with you. Salaries when you're starting out is not as high, so I had to find other sources of income. But what I did was, I think it was 90% of that, 90% of what I got from that extra side hustle or extra source of income, I save and invested, because my mentality was it's extra. It's not something that you
Exactly.
would, and the 10% is to buy something that I wanted. So the motivation there
Mm-hmm.
is this: if what I wanted to buy was worth 100, but I was only getting 10 from my extra side income, that motivated me to earn that extra 90 more. So it was actually a motivation to, if I want to buy this, so I have to work harder, I have to work more. So that's
I
interesting.
think we're on the same page there.
Mm. Now you're 27. Then you
Mm-hmm.
started to dabble into real estate at 25. When money started to come your way, were you enticed also to try other investments first before going into real estate, or you immediately, oh, I'll just do real estate quickly? Because a lot of people get intimidated by the fact that I'm young. There's a lot of commitment if it's real estate, and there's a lot of money involved as well.
Mm-hmm. I think not for me because I've always been kind of looking at long-term investments. I actually, at the time, already had an index fund that I was putting money into for long-term investing. But I just wanted to kind of expand outside of that. And I had done a lot of research into real estate. And I just felt like that was a really good avenue for me. I felt like it was something I was going to get a lot of money back from, as well as like just the way, US tax codes are written. They're written in the favor of property owners. Like you get a lot of tax incentives and tax breaks for having real estate, and it's a scalable business. There's a lot of different avenues you can go into. You can go buy rental properties, you can do the flipping side of it, you can do wholesaling. So there's just a lot of different things that people can try as well. So that's, I think, why I was more enticed toward real estate.
Okay, got it. Before I go right smack in the middle of real estate, I'm curious on this. You said index fund. What was on the back of your mind when the markets crashed last March 2020? Did you panic? Did you check your portfolio? What did you do at that time?
I check my portfolio, but I don't really panic. I actually, at the time, I had a lot of my money pulled out from my index fund to put into my real estate at the
Mm,
time. So a significant portion was pulled out because that was like 2018, 2019. So a lot of money was pulled out. But in terms of like 401k and the money that I still had invested in the index fund, I really didn't worry. I mean, that's kind of those little moments for me, like short term things like that. I always kind of figured the market will recover, and it did, and it's kind of recovered leaps and bounds. So yeah, it's those kind of things don't worry me.
you mentioned a very, very interesting topic about house hacking. So we have a
Mhm.
global audience here. For people who don't know what it is, can you explain what house hacking is? And then how did you go about that? And how is it making money for you as well?
For sure. Yeah. So house hacking is just a strategy a lot of either young investors or beginning investors use. I think a big misconception is that investing in real estate, you need tons of capital on hand to begin investing. Just takes a lot of upfront money. But the truth is that you are able to use the system kind of work in your favor. So in the US specifically, there's a lot of down payment assistance programs, especially if you're buying the home to live in. So it's kind of a legal loophole where you are able to buy a property as a, homeowner and live in the property, but you can buy a property that's a multifamily property up to 4 units. So that means I can buy a 4 unit property or a duplex or a triplex, 2 unit or 3 unit, and then I can live in 1 unit, and I can use that down payment assistance program. So I'm not having to put down 20%. I only have to put down 3.5%, but then I can rent out all the other units. That money kind of comes back to not only pay your mortgage, but also put money into your pocket. And with the FHA program specifically, you only have to live in the property for a year. So then the idea is after you're out for a year, that property is cash flowing, you can fully rent it out, and then you can either move on to the next one or refinance the property or do whatever you want to do to move on to the next stage of investing.
So basically, to everyone watching, house hacking is you get a larger property, then uh, other portions of the house that you're not using, you rent it out. Since this is something that's published information and the loan is at 3+%, why is not everyone doing this? Why isn't everyone doing this? Since it's a very, very good way to get cash flow, and in the same way get a property at a very, very cheap interest rate.
I think I don't know if everyone knows about the way that you can use it for multifamilies. I think also just a lot of people who are looking to buy a home to live in, they don't want to be landlords. It's just something that they're just not interested in doing. Being a landlord requires you to have a lot more responsibility. It requires you to have a lot of like customer service and client facing activities because you have to, you're collecting money from people who are living in the property that you own. So I think it's just a level of whether it's just not something that interests people or maybe they just prefer a different investing strategy. But I think it's like being a landlord is a big responsibility. And it actually took me a while to learn about the FHA program and how you can use it for multifamily. So I think maybe a lot of it just people don't know. So that's why I like talking about it, and introducing people to it, because I want other people to know about it.
How long did it take before you got everything fully rented out? Was it hard? Were there any challenges that was it vacant for quite some time, and what did you do to get people to stay there?
I was going to originally just post it on Turbo Tenant and have it post across, like, because it does a thing where you can use the software to post across multiple listings all at one time. So post on Facebook Marketplace, apartments.com, and a bunch of other sites. But first I wanted to test it by myself on Facebook Marketplace. No joke, I posted it. Within 2 hours, I already had 20 people reaching out to me about the property. So in my head, I was like, dang, I should have listed it for a little bit higher, but that's okay. But it got rented out literally within like 3 days. So it worked out really, really well.
At the height of the crisis, when people were losing jobs because of the lockdowns, were there people skipping out on their payments, or did you ever experience that problem? And if you did, what did you do something to be able to do to be able to remedy that as well?
No one was really skipping on payments. There was a couple times that I've had like a tenant to just split the payment between 2 paychecks. And they've always honored that. They've always paid when they needed to. And that was, again, during the pandemic. But beyond that, I really haven't had issues. I actually voluntarily allowed them to not pay for a month because I could afford it at the time. And I felt like, I know one tenant had expressed concern about just like getting less hours at work. So I was just like, this month, don't even worry about it. So I gave them like a month off of rent at that time. But no one on their own came to me and was like, I won't be able to pay, and then didn't pay. Like, I've never really had issues with that.
And of course, because Aysha has a job, has index funds, and has real estate, money's not a problem for 2020 for Aysha.
Oh goodness, no, that's not true at all.
People might be scared when they think about this. Someone might be living with me. How do you screen the people that they're not either murderers, or they're not weirdos, or they might not do something that might be really, really bad in the future? I'm thinking about there might be people that they might be scared about security in terms of this. And before that also, does this work also that you buy a 3-bedroom apartment, 3-bedroom condo, then you just sleep in one room, rent out the other 2?
To your point about just being in a multifamily in general and having neighbors who are your tenants, I think it's just a lot about communication. When you are, like, I was grandfathered in a tenant, he came with the property. But when I was screening for new tenants, it's just important to do a really thorough screening process. So like I said earlier, I use Turbo Tenant. So that's where I go through the application, and then the applicant also pays a fee, and it goes through a thorough background check as well as a criminal background history. And then you also get their credit history. So you get a nice overall picture of everything that's going on. It checks for evictions, it checks for, like felonies and stuff like that. So I think it's super important to do that. It's also, I never rent out a property without them coming to see it first. So a lot of people reach out to me about the property and ask to apply. And I really tell everyone, in a dire situation, if you really need this, you can apply. It does cost a fee to apply, but I prefer everyone to see the property so they know what they're getting, so they feel comfortable. And then it also gives me a chance to really talk to them one-on-one and kind of get a feel for them. And then if I do, have that good experience with them, they can apply for the property. And then that's how I also get that thorough kind of background check. So I feel like I do a pretty thorough process through that.
Got it. For your leases, do you take it at least a year for your tenants that they rent it out and slot it in for that length of time?
So it's a minimum 1 year, and then after that 1 year, I ask them if they want to renew beyond, like if they want to do a 2-year and lock in, a rate for 2 years. But I never do less than 1 year.
Doing real estate, does it take a lot of time, or it's something that's manageable? Would you say like in a day it takes an hour of your time?
So it really goes through just waves. It's like when a tenant is preparing to move out, or like when I was moving out and putting a tenant in at the same time. Those chunks of times are a lot, because it's like you have to go in, you have to assess everything that may need to be fixed or turned over and that kind of stuff. And it's like, what step am I taking on to do myself by hand so that I can save money? What things do I need to hire someone to come in and do? And then like scheduling all that kind of stuff, and then preparing the tenant for move-in as well, meeting up with them to do the key handover and all that kind of stuff. But usually once the tenant is in, it's like a couple communications per month, because the water is in my name, so I have to send them the amount due for water each month. So that's an email. Reminders about rent I also send out, and then after that it's kind of like smooth sailing, unless there is like an issue that they have and that they need addressed or whatever like that. But so yeah, it kind of goes through it gets really, really busy, and then sometimes it's super, super slow.
Got it. Now, I'm interested on this. While we were talking prior to us recording, you mentioned that one of your specialties also is finding uh, good deals that finding real estate deals that are cheap. So for people watching this, what are your tips for them to be able to spot a property that's either below market or could give them a good upside later on in the future?
For sure. I think having a really good network, I think, is one key. So I started off, I got a referral to a investment specific realtor. So she was able to help me because she's had investment clients in the past, and she's had experience with closing on investment style deals. So she knew that I wanted to live in my first property, but also make it an investment property. So with that in mind, she was better able to help me cater to my needs. It's also about like being very, very prompt. When a good deal comes on the market, it usually doesn't stay very long. And especially like in the beginning when I bought my property, you know, like I wasn't super plugged in with all the people that had the deals on hand. I had to do a lot of searching through sites like realtor.com and Zillow. And then I think like finding a deal, sometimes you're not always going to get like super, super below market, but it's also looking into the potential for the areas. So one of the areas I looked in, it was appreciating like 8 to 10% a year. So I was like, this is an area that I obviously want to be in. Even if I don't get it super, super cheap off the bat, I know that it will really be worth my money in a few years.
So it's okay for you to buy something that's relatively higher as long as appreciation is there, because later on it will look cheaper already because of the appreciation going on in that particular area.
I wouldn't say higher. I still got it a little bit below market, but I think like a rule of thumb is like trying to find things like 80% market value, and that's really like not always achievable. So even if it's like 90 to 95% of market value, if you're able to knock it down a little bit, but then you find something that is able to appreciate, because you don't want to rely on just appreciation alone, because you never know what can happen. What is happening right now is a lot more solid than, you know, speculation in the future. Like we never would have seen the pandemic coming and how it's affecting people being able to pay their mortgages and stuff like that. So a lot of that stuff you're not able to predict. So I try, like, if you're going to find something, try to find a balance that, you know, will work out either way. Because I still didn't overpay for a property, even if, you know, next year everything tanks and, you know, everything tanks and, you know, appreciation ends up being like only 2% for the year. My property, I still never overpaid for it.
I'll give you a scenario. What if your tenants suddenly all leave after their duration? Something bad happens that they all go out. What's your contingency should no rental income come in?
Well, again, so I have a property that is in a high demand area, so I'm able to find a tenant very quickly if something does happen. But again, it's also important to have savings. It's important to not just stretch yourself too thin and be so reliant on, you know, your tenant income that you're not able to pay if something were to happen. So be prepared for a vacancy, worst case scenario. Like for me, 3 months, but I really don't see that happening. But you never, like I said, you never know. So having that money on hand that you save yourself, you don't want anything happening to your own mortgage and your own credit and your own business because you had issues with the tenants.
For 2021, will you be more aggressive in buying more properties? Do you have, and secondly is, do you have a target that I want to get this number of properties, then I'll stop?
So I think it's less about properties and more about cash flow. So I have 2 properties right now that I was kind of telling you earlier. So it's like the 2-unit property that I have, and then I also have one that I use as a flip. But I think instead of aggressively buying properties in 2021, I'm looking at more like aggressively saving for more properties. I want to be able to put more down and finance less so that off the bat, I'm able to cash flow a lot higher. And then also just have that cash. And then again, like diversifying, I know we were talking about this earlier, but just diversifying and investing more in other avenues as well. So I think it's less about like, if I do find really good rental property and rental deals, then I will invest more in rentals. And I do want, I think in my head, I'm saying like 5 to 10 units is kind of like my sweet spot of what I want, but who knows in the future. But I think it's more about just like, if I have one that cash flows $100 a month versus one that cash flows $1,000 a month, I want, you know, 3 or 4 of those ones that cash flow $1,000 a month, and I'll be set a lot more quickly than having a property that I'm only getting $100 a month from.
Are you very, very specific that you need to get this percentage of rate in terms of your income from rental, or if this area won't give me above 5%, I'm not buying this anymore? Or are you more for the appreciation and then the rental rates are just a bonus for you?
I believe cash flow should, especially when you're beginning off, cash flow should be a consideration. It's something you should really think about heavily, just because that's what helps you scale. That's going to pay for any unexpected expenses that come up, so you're not paying out of pocket. It also helps you save for your next property, but it's not something I rely on completely. I look at how much I'm putting toward equity, how much cash flow I have, and how much appreciation. I try to look at those pretty equally. Like I said, maybe cash flow a little bit more, but I really try to, look at everything when I'm considering a deal.
Okay, I'll end it with this. You're 27 years old. You're investing. Majority of people, at least in our generation, are like to spend more, regardless if it's the new iPhone, the new the PS5 or a new car. What's your motivation that instead of buying stuff, you're investing?
I think my motivation, kind of like what I was talking about earlier, I'm really looking for that financial freedom. So I'm willing to forego some of the things in the short term if that means that I can get to a place where I can kind of stand on my own. I can work for myself, because that's kind of like the ideal situation, being able to work for myself on my own hours. So I just see that as a long-term motivation for myself, and that kind of helps me mitigate any urges I may have. Like, I splurge every once in a while. I'm not going to act like I don't, but I definitely feel bad when it leaves my pocket. So I'm definitely in the saving mode almost at all times.
Do you buy in Starbucks?
No, I don't. I can't. I buy Starbucks as a treat, like probably once every few months. I'm very much a coffee at home person.
Got it. Okay, any final words for people watching this? Anything that you would like to encourage them on? And you have a YouTube channel. How can they reach you if they want to learn more about your insights as well?
Awesome. Yeah, I think any parting words I have is that, like, investing really is achievable no matter who you are and no matter how much money you have, especially in this day and age. Like, investing is just so accessible to everyone, whether you're looking into stocks, whether you're looking into real estate, or whatever avenue that you're really considering. So really do your research and find out what investing strategy really works for you, and just find ways to set yourself up for success in the future, because it's just always good to have something going on for yourself that you're in control of. So that you are set no matter what happens. So if you're interested in more information and kind of following my journey, please follow my channel on YouTube. It is Aysha Properties, Aysha Properties, and you can kind of follow all the things that I do and some of the stuff that we talked about today.
All right, so guys, I'll put the link in the description. But yeah, you don't have to subscribe to me, just subscribe to her. It's totally fine. So I hope you got a lot of insights from her, and it's nice to hear different perspectives, especially in the world of investing, because there's no one-size-fits-all strategy. What works for me might not work for her, for Aysha, and what works for Aysha may not work for me, and what works for you may also be a totally different strategy. But it's nice to hear different styles so that you get to pick and try them, and then to double down once you start seeing them do well for you. So thank you so much, Aysha, for being part of this. But before I let you go, I have this portion called Fast Talk. I give you two options. You pick one. There's no right or wrong answer. It's just plainly for fun. Okay, ready?
Okay.
Steak or salmon?
Oh, salmon.
Success or significance?
Success.
Large, massive mansion or to travel the world?
Probably travel the world.
Win 100 times but lose 50 times in the process, or win once but not lose at all?
Win 100 times and lose 50 times.
100 million doing what you love, or 1 billion doing something you do not love?
100 million doing what I love.
Elon Musk, Steve Jobs?
Steve Jobs.
Work hard, work smart?
Work smart.
US dollar, euro?
US dollar.
Landed property, condominiums?
Landed property.
Bitcoin or gold?
Bitcoin.
Fitness, finance?
Finance.
City or country?
City.
Beach or mountains?
Beach.
LA, New York?
LA.
Cut loss or hold on and fight for the business?
Hold on and fight.
Die with a lot of money or die fulfilling purpose?
Fulfilling purpose.
Safe or aggressive?
Aggressive.
And the most important question in our last question, money or love?
Oh. I'll say love. I'll say love.
Okay, so thank you so much for that. And to everyone watching this, I hope you guys got a lot from this, and I hope this video helps you trade well, trade strong, trade smart. See you all again soon, and God bless you all.